The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
The stock of the day is Fisher Paykel Healthcare. The company has reported a 43% jump in profit for the first half of the 2025 financial year to the end of September. Net profit after tax now at $153.2 million. Operating revenue rose 18% to $951.2 million from the prior corresponding period. Fisher Paykel also reaffirming its full year guidance with net profit after tax in the $320 to $370 million range. And today we are seeing the stock coming under a little bit of pressure, but worth noting up something like 52% year to date. Brokers pretty mixed on this stock, so let's get the team's thoughts. Howard?
Yeah, I've actually owned Fisher Paykel for many years, so I should say that to viewers first. I think the first time I bought it was about $6. I've added to it over time, so I've done really well out of it. However, it got an enormous boost at the beginning of COVID. And even with this fantastic result today, and it really was a fantastic result, its earnings per share will still be lower than in the first COVID year when hospitals were desperately trying to get a hold of equipment and masks. And that's probably why the market was a little disappointed. But you know, anytime a company reports profits up in the range of 43% or so, or 47, I think it was in constant currency, something like that, on the year before, you should be cheering and very excited about it. But it is on an incredibly high PE, and that's part of the problem. So great business, but very expensive at the moment. Before this new announcement, it was on a PE of 103.
Wow.
So even if it's up 40% for the year, that'd be a PE of about 60. So it's still not cheap. The times I was buying it, it was in the PE range of sort of around about 20, 25 or so, and that was a great time to be buying. When a company's in a PE in this sort of range, you may want to hold what you've got, but you wouldn't rush out and back up the truck and buy some more.
So a hold.
Yeah, great business, but a hold.
Okay, Grady.
Completely agree. Incredible business. They've got some new mask products coming out, which is always good for the market. And I know, as Howard said, in COVID, all these hospitals and doctors could not get enough of the masks that Fisher Paykel had and all the other complementary products that different producers had. So the result today, extremely good. I think the market was probably expecting COVID levels, but I think for me personally, looking at the company, you can't expect, like in the post-COVID era, a lot of healthcare companies have fallen back and change what they're doing and change the outlook of how they're going forward because they had to shift their focus. But Fisher Paykel hasn't had to do that. They've still actually seen growth and net profit growth. So that means they're managing costs really well. And it's an incredible company. So yeah, I think a really good company. They've got capacity back at hospitals are back to normal, and staffing at capacity is back to normal as well. So for me, it's probably a hold rating. I think the shares rallied into the results, so people probably just a bit profit taking today. But again, fantastic company, can't fault it, but a hold rating because it is on an elevated PE.
All right, so a hold from both Grady and Howard on Fisher Paykel, which, as we mentioned, up 63% on the year, 52% year to date. So already looking potentially at levels where you may not want to accumulate right now. That is, of course, the stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.